All right, welcome to the weekly meeting, June 8th. June 8th. Okay, hopefully everyone has had a productive start to the month. There were a couple of trades that I liked coming into the month. Let's look at, was it EN or EA? EN. Okay. Um, I kind of just want to recap real fast because coming into this month, we expect price to buy back up, right? Buy back up to our zone and then push down or somewhere close to the zone. GN was a trade that's similar. Want to see it buy up before it sells down. And the reason why I want to look at this pair before everybody else gets on or whatever is because with this pair, we had a double bottom right here. And I anticipated that we would have some inducement or a liquidity grab before price pushed to the top side. If you guys trade smart money concepts, you'll know that you should expect to see the liquidity ran before price push back up. But more importantly, you want to look over here on this side of the chart to see what needs to be filled, like what kind of imbalance, what kind of order block, what kind of information do you have on this side of the chart that would attract price before price pushes up. And last week, all I did was drop down the time frames, and I saw this imbalance on the 4-hour chart, right? So if you trade smart money, you understand that really this, from this move down, all of this is an order block. This down move to this up move, right? You have two imbalances in this order block. So I knew when we ran liquidity, we would definitely close this order block and we would probably, close this imbalance and we'd probably tap into this level. So if you trade smart money concepts and you're a fan of ICT, you could have just measured the 50% of this imbalance and took your buy position here. And this is not anything that you would have had to be sitting on the charts. You could have put a limit order. Your stop loss would have went right below the liquidity zone here. So maybe you have let's just call it a 40 pip stop loss, and your take profit would be at your monthly 50, which would be about 350 pips. And you're getting about close to 10% return on this trade. And you can see it tapped right in on Wednesday, and price is pushing towards your take profit. Look, man, I get some people don't believe concept wise in these types of trade opportunities. But if you want to trade with any longevity, you're going to have to commit to a system that you can find consistent setups that pay off. And this is a prime example of a setup that is currently winning. Now, I didn't take this particular trade. It is just one that I called out that I liked. I took a US 30 trade I was more interested in US 30 gold, and there's an EU trade that's interesting as well. But you can't take every trade, but the trade setups that you identify and you recognize uh, should be high probability setups that you can basically take to the bank on. All right. Let's talk about the US 30 and why that was an attractive trade coming into the month. So US 30, all right. If y'all know me, you know that the first week of the month is really when you can make, man, a crap load of money. I mean, you can make anybody's monthly salary. You can make it based on the monthly setup. All right. We spoke about the bearish order block, the price pushing up, taking liquidity, and selling off. So last week I told you guys that price would probably push up into this imbalance area before the sell. The problem with just using these default settings is you can't really see everything that you need to see. So we have a bearish order block on the weekly. We had it push down. So we expected price to push down, then up. And if I drop to the 4 hour, we can see that we got the exact move that we wanted, right? This was the end of last week where price had closed. We saw it, it left this huge imbalance. So all we would have had to do is fib, right? This 4 hour candle, or if you just an order block person, maybe it's the 12 hour. You could have fibbed this 12 hour order block. This would have been your zone here. This would have been your 78. So if you would have placed the trade at the 62, covered the 78, you'd have caught this trade to the upside, and your TP would be this zone up here, right? So you would currently be in profit. And I'm not still in the trade, but I took profit at this first level here. Uh, I'm going to get back in and ride it up to the top. But if you took this trade based off this setup right now, you are in profit and you're on your way to we'll just call it a 5.5%. It's 5.6% trade setup before it taps in. If you know how to drop down um, in your time frames, if you know how to get lower, then you could have gotten in with uh, a much more lucrative trade setup here, where you would make close to 10% if you drop down in time frame. But if you just took it off the 12 hour, you're still making 5%. And it's probably going to hit TP early next week. When I say early, probably before Wednesday. Um, I know everybody is not a swing trader, but you should be. But whatever you're doing, you have to make sure that it's working for you and your pocketbook. But again, it's a good setup, and it's probably going to pay off coming towards next week. Gold. There's a lot of people in this gold setup. I was tracking for gold to come to the golden zone. All right. Um, Monthly candle, as we can see, we came up here. We wicked out in this area for the last three months. So all I wanted to do was retrace into this wick before price pushed down. If we go to the weekly chart, you can see we had this bearish order block a couple of weeks ago that we didn't tap in. So I figured we go up and we tap into the golden zone and we push down. I want to call your attention to something. If you're counter trend trading, if you're trading this up, which I was doing, I think a lot of us were doing that, you have to take your profit at the 50 because you can't expect for this to close your imbalance every time. All right. So if you would have taken your profit here, you would have, I mean, you could have gotten paid a big time. There's a setup, there's a 4 hour setup that happened on Wednesday that would have taken you all the way up. Or you could have traded it Wednesday, gotten out, and then traded it back up again. There are several ways to catch these trades, as you can see, just using these imbalances. But my point is this, guys. If you were able to catch the meltdown on Friday, right? You got more pips than you did from Wednesday to Friday. But when the NFP news dropped, gold fell, which we should have expected it to fall because we understood that it was a bearish order block and we just needed to tap in. So if you were anticipating this, you caught the fall. Here's the deal. Why did we leave this area with imbalance? Why did price not close that in? And to me, the answer is pretty simple. If I'm looking at these swing points, right? This is the last swing low. Then we made a new high here, right? All right. Then price came and broke these internal lows, came back up, met the imbalance and started dropping. When this price breaks this low, let's just call it here, and this is all fictitious, but when we break this low, when we pull back, we're going to pull back into and close this imbalance. So if price pushes from this high to this low, now you can see that this imbalance fits within your 78%. So that's why they created this inducement area, right? This zone here, so that people with narrow minds or people who never look up, they get ran through because they figure, hey man, price pulled down, broke these lows. It won't come back up past this high. It is going to come back and liquidate that high, but it's going to do it after it breaks that swing low. So you got to pay attention to your structure. And if you're counter trend trading, which I think everybody should be doing, because when you catch these types of moves, I mean that's a lot of pips. So when you're doing the counter trend trading, you have to understand where you can take your trade to, the level that you can take your trade to, and you're just taking it back to a premium price because you want to sell it from the premium. That's your 50% is considered premium, and then you want to buy it at the discount. And at some point when we break these lows next week, it'll make it an attractive buy back up to this level. Hopefully, I'm not losing you. If I am, hit me up on a on an individual basis. But that's what I expect. So next week, if we look at this weekly candle, you can fib this weekly candle, expect price to come back up to this yellow area, which is an area of imbalance. You can see there's clearly imbalance in both places. That's exactly what I would expect. And I would expect it to not take out the 4 hour swing low before it does it. I would expect for this price to turn and burn relatively early, because I think that we'll take out that swing low the following week, or maybe like at the end of the week. I expect this to buy up first, then push down to break the swing low. I don't expect it to break the swing low, then come up here. I expect it to push up first, then push down and break the swing low, then come back up here that following week. If it doesn't happen like that, then I'm not even going to look at trading that. All right, any questions on go? All right, the Nasdaq also has some good opportunities, but I'm not gonna speak on. What I would like to say is there are two significant things that happened for me this week. Coming into the month, what I anticipated was the dollar to push up. I think the dollar is going to have a strong month, and I would like to see the dollar close bullish for this bullish order block. That way, we can get the final push on the dollar uh, before we get into this election year. So I think the dollar is going to push up towards the imbalance here at 108, 109, maybe even push all the way up to 112 before it collapses. Um, and if the dollar is going to be pushing up, then we should be expecting gold and the indices and whatnot to push down. And I think all of that is playing out in front of our face. So it's the same reason that I expect Bitcoin to push down into the low 50s. I expect ETH to push down, about into the 3,000 range. Eventually, maybe it pushes down into the high 2,000s. But I think if you start looking at these charts, then you can clearly see where price needs to fill gaps in price and imbalances. Right, we need to rebalance this weekly leg that we had in May. So price should push down to fill that gap. There's a possibility that it could push further down into this area, like into the high 2000s, where price needs to be rebalanced. But first things first, we can expect these down moves to happen um, here in the coming week, right? Bitcoin had a bullish order block, but I expect for it to pull back and fill this area too. I think that the dollar getting stronger and these other assets pulling back is the trades that we should probably look at, unless you're trading the nasty Nasdaq. I think Nasdaq is a little bit different. I believe it's going to pull back a little bit, but continue to rise, probably largely due to the AI. Again, I don't want to really uh, harp on that information. The second significant thing that happened this week was the good old euro. All right, for those of you who don't know, the euro, uh, European Central Bank lowered their interest rates for the first time in 5 years. It's the second major currency to drop its interest rates. So, what does that mean for us as traders? It means that I expect to see the euro start to decline against the dollar and many other of the major currencies. Um, let's go down into this chart. So coming into the month, we had this bullish order block set up. And I remember arguing with some people saying that price was still going to fall and price was going to come down to this area. And of course, they believe like they believe, and I believe like I believe. But my point was this was the controlling order block that pushed price down. We broke two levels of structure here. Now price just needed to come back, trade back up into these unmitigated zones before price starts to collapse. And lo and behold, we get the announcement last week that they lowered their interest rates. And let me remove this. The interesting thing to me is when they lower the interest rates, you get this push up that takes out all this liquidity for the last 1, 2, 3 weeks. Price pushed up, took out 3 weeks of liquidity, and then started to fall. Okay. Um, the people that trade with me understood that we needed to fill this imbalance. Price came back up to the imbalance. It sold, pulled back up, and then we got that epic drop on Friday. So I expect the price to push down, maybe break this level before it pulls back, but it will pull back to this area. I'm personally um, not going to look to trade this until it gets back up here, and I'll short EU back down. Um, Personally, going into the week, I think I'm more interested in getting that US 30 trade, but this is a trade that I want to take for a longer term. And being that it has a lot of news or whatnot, I would rather just wait for it to get back up to this area where I can look to short it. And I'm not really wanting to short this until it gets to the 62. I want this thing to push as high as possible before I short it. Now, with that being said, there's a high chance that I'm just going to have to set a limit order up here, and the news wick that pushes up and then drops the price is probably how that sale is going to take place. Um, any questions on EU? The other E pairs um, also I would anticipate bearish movements, even though a lot of them we'll look at EA and we'll look at EA and Euro Chef. So if we came into the month expecting a pullback and then a sell, and I think this played out pretty much how I expected it to play out at least. All right, we tapped into this order block and we had this long wick. And when you drop down into the lower time frames, then you start to see where your imbalances are and where this can actually play, the levels that this can play to, right? So we had an untapped zone here that the price ran into this past week. We have another order block in this area that we might push up to before we sell, right? This order block right here um, is a potential target to sell from. There's a small imbalance here, but I don't think we'll make it this high. Uh, I think that price will maintain this bearish structure. All right. I think it'll maintain that bearish structure based on them lowering the interest rates. I do think we need to pull back this imbalance. I think we'll push up to this zone, and I think we will sell from this zone, right? Um, if we sell from this zone, like if we just push up and sell from this zone, um, I'm not going to be interested in taking a trade because I want to see this area that's not been tapped. I want to see this be the area that holds the sell. And if you understand inducement, then you'll probably understand why, for me, um, I'm not trading it until it comes back up here. And what may happen, is you get this action and we break these lows, right? And then it comes back up to that area, right? So if that's the case, then I will just wait until it breaks these lows. Then I will be interested in buying it up to sell it. But I'm personally not interested in a sell until we get to this high, right? Or, till we get to these order blocks. Because it's not tapped, it's unmitigated. And to me, that's where price needs to come to push down. Any questions? Awesome, awesome. And the last trade setup that I like. Euro Chef. All right, Euro Chef did a lot. All right, at the end of the month, we had this doji candle, and we expected price to push down. I really thought we push up first before we push down. But in this case, we pushed down first, right? Now, if you'll remember, the Swiss franc lowered interest rates first. So I don't have a problem with euro going down to this area, right? Then buying up. I don't have a problem with that. So what I think is going to happen is we will push down, we'll push back up, then we'll push further down. If we look and see what we have here, on this weekly, we have a strong bearish push down, right? I expect price to retrace to this zone before selling further. But just like on that monthly chart, when I look at the lower time frames, there's an area of inducement here, right? So we got this bearish daily order block. Many people would have saw this as chalk, right? Because there's a level here, we pushed up, we pulled back. That's a 78% pullback. So some people could have taken this as a chalk to buy up. It happened on a Friday. But for me, what I was always looking at was there's a 1 hour zone here. There's a 1 hour imbalance that needs to be filled. And for price to come down here and just hang out, is suspect, right? Price comes down, breaks this high, which you can say is a chalk, pulls back 78%. No, bro. Like, then it gives you a fake break here, but it doesn't break this high. It ain't going higher. It's going to come low first. This was an area of inducement. It's going to run the liquidity low. Then you'll get a buy up. So if you are looking to take that buy, I would wait for price to come. I would just take a consequent encroachment, which is about a 50% of this imbalance here. Then I would look to take a buy back up to the zone. And this would be about a 6% trade, right? If you want to do it on the safe side, you can use a 5% trade and just get out at the 50% mark. Any questions? Did anybody take any losses this week? Did you have a question about? Nobody want to share? Salinas.
Yes, I want to share.
You don't want to share?
I mean,
Y'all be killing me.
I took losses.
You took losses plural, or you took a loss?
I took plural losses.
Oh my God. Yeah.
I took a loss on GJ. I took a loss on US 30. And one of the reasons that I did it was because I had my stop loss. When I move my stop loss into profit and it'll come back, or not move my stop loss into profit, I'll move my stop loss and I'll get stopped out. GJ just didn't do what I thought it was going to do at first. So, yep.
Can we talk about can we talk about these JPYs? We may as well, guys. We may as well. All righty. Look, I think all these JPYs are going to sell. Except for maybe Chef JPY won't end up being a sell, but I think they're all gonna sell. But there's absolutely a benefit in trading the way I trade, right? Because if you look at what happened, GJ went down and grabbed the liquidity from the bottom of this candle. If you trading, if you trade a pullback on a monthly candle, right? On the monthly, a lot of times you're going to be safe taking your profit on that monthly pullback. If you had just traded the monthly pullback on this candle, then you wouldn't have lost. You're still in profit. You were in bigger profit, and then it pulled back, but you're still in profit. And maybe this monthly pullback, let me look at it. So if you're trading this monthly candle to this zone, then you're in profit. You were in bigger profit. You're not in such big profit, but there's no way you can lose by just trading it to this level. So what I believe is we have to get back to the basics. If you're on this monthly chart and you're taking a trade from here to here, don't freaking TP. Don't move nothing until it hits your TP. We have to get out of our own way as a trader. Now I got it. It's a lot of eye candy to look at on the lower time frames, but in my opinion, if we stick to the script, and I'm going to look at EA too, but if we stick to the script and we just taking this trade to where we're supposed to take it, it's like that Summer Walker song, you can't lose. This trade right here, you trading this monthly candle back up, ain't no way you can break even on this trade. Kai, what happened? Did you say you traded EA, Kai?
EN, not EA.
I was gonna say, there's no way you can't break even on that. It's all W's. So the EN trade, so you didn't believe it was coming down here? Kai, I got really
I gotta leave the room.
I got really detailed with this trade. I fibbed this move right here, so I had the golden zone mark. So I don't get it.
I don't either.
Well, let's
it hit my TP.
But let's talk. So you said it did hit your TP?
It did hit my TP.
So look, if
like
you
on the money, and I got out. I guess in the middle way, I got a little. Yeah, I kind of broke even.
Okay, this trade down was 146 pips.
Mm-hmm.
The trade back up is 300, 350 pips. You won that trade, and now you're winning this trade. Only thing that could go wrong in this scenario is you didn't believe in the setup, because this did exactly exactly what I said it was going to do. It pushed down to that exact imbalance, exactly halfway through that.
I know. It hit
And
like
now,
right there.
and now it's buying that.
I
This
learned my lesson on this
Four
trade though, because I did too much. I added 2 positions and I was like, I'm just gonna break even.
so
I
guys,
should have did that.
well, this is all I'm saying.
Go to the 4 hour real quick. Okay, yeah. So it broke structure on this 4 hour and then it tapped back in. So that was your entry confirmation. After it tapped back, after
No, TT.
4 hour.
That's no, y'all. Y'all stop. This is where we get in trouble. Stop. This is where we get in trouble. Only thing we have to know, there's a daily bearish order block. Fib that freaking candle. We already identified where it needed to come from. We are or where it needed to go to. If you go on a daily, you go down to the 1 hour because it dropped 2 time frames down. We don't have to overcomplicate the issue. When you drop down from that daily order block, we knew that price had to come back to this imbalance. If you would have protected this imbalance, right, then you caught this trade just like this. This is the setup. There's your 78. You put your stop loss a little bit above the 78. All I did was cover this candle. This imbalance was your target. Price comes in right here. You're in the trade. You're doing nothing else until it hits TP. I don't care about all this movement. Y'all shouldn't either. You're in the trade.
No, I'm not talking about this sale. I'm talking about the confirmation for the buy up. I was just saying that maybe that's a confirmation that you'd be able to look for the buy back up.
Okay, I hear you, but we already have the confirmation for the buy. It's the buy up is going to happen because you got the order block that needs. This is a bearish order block. We know that it's going to buy up to this zone. Like this is a concept. You trade the concept. If you don't believe in the concept, don't take the trade. You can't win.
But that's what confirmations are for. And I'm just saying,
I disagree 1,000%. You trade the way you trade. If you're going to trade the way I trade, I'm telling you what you need. Your confirmation was price pulling back to your zone. You enter the trade. You're either going to lose at the 78 or you're going to win when it hits your TP. As a trader, we assume risk. We assume risk based on our setups. When you enter this trade, you assumed the risk. You either believe it or you don't.
With additional confirmation.
TT, your confirmation is when it rejected from your zone.
On the lower time frame, it's the same.
Yeah.
But I'm just saying it in a different way.
You can't, once you're in this trade, you allow the trade to play out. Once you're in here, you don't rethink and reassess.
No, I got the air coming through here though.
Do y'all get that? Once you're in the trade, you're in the trade. If you can't do that, then I would rather you just go back to demo or don't waste your money because we're in essence we're wasting money. We got our displacement, we got our break. Price traded right back into the imbalance. You protect the top of that candle. It's either going to hold or it's not. We already targeted. We did all the work. We targeted where it was going and why it was going there. Price pushed right down there. Rejected. Broke this high. Broke this high. Pushed up. Pulled right back. Bam. You're rolling out. That's it. If we're adding anything to this, guys, we're we're in trouble. That's all I'm trying to tell you. If you're adding anything to this, you're in trouble, because now you're introducing other areas that can screw you up. Anything you're adding to, you're overcomplicating the trade. Trading should be simple. It either does or it doesn't fit your criteria. For instance, I got a displacement candle. I got a break of structure. I got to pull back into this imbalance. I'm in the trade. I put my stop loss above that candle that this imbalance was on. It either holds or it doesn't, and the price falls. Boom. This is how I trade and how I find success. If you're doing something different, it's probably the reason that you're not getting out of the trade what you could be getting out of the trade. Price can do whatever it wants to in between point A and point B. If you're adding things to the trade, you're going to get screwed up because you're adding too many factors. It either does what it's supposed to do in your zone or it doesn't. And your confirmation, you had a daily bearish order block. Your confirmation for that was pulling to your zone and your imbalance holding. That's it. Then it went to TP. We knew it needed to come down here to fill that imbalance. It either respected, you got one rejection, two rejections. It either respected or it didn't. So once you got that second rejection, you're in the trade. Your stop loss is below that imbalance. You didn't even need the push up and pull back, even though you can have it if you want it. But that's, to me, this is adding another piece to the trade that's already, it's already been confirmed. You don't need 3 and 4 confirmations. I think we're overcomplicating trading. The concept that you trade around needs to be a few different things. As a smart money trader, I'm trading order blocks, break of structures that have imbalances. Price comes back to that imbalance that broke the structure, and we trade back the opposite direction. Simple. 3 things for a valid trade setup: an order block, a break of structure, and an imbalance. That's all I need every time. And then I take the trade. And the trade hits TP in the high 90s, more than likely. I'm not saying you can't lose trades, but you got to be okay. You take that into consideration based on that trade setup. Get in the trade, let it ride. Because you can't win if we add our elements of ourselves into the trade. That's you can't add stuff to the trade setup, because the charts are going to show us whatever we want to see. We can get as scared as we want to. It's gonna give us whatever we want to see. If I want to see a sell, I can see a sell. If I want to see a buy, I can see a buy. And there's 1,000 different moves in here, right? Price comes down, it wicks out. Man, price is probably buying up without it hitting our zone. No, that's not what happened. But if you're just looking at this piece of the chart, then it comes down and wicks out again. Oh, I got a higher low. We're in trouble. That's why we do our analysis on Saturdays when the market ain't moving. Then on the weekdays, we actually take the trades for profit. Because if you do your analysis while the chart is moving, it's always going to show you whatever you're scared of.
That is so true. I'm going to stay off the chart.
Yeah, if you get you a concept you believe in, please. Everybody needs to trade a concept they believe in. Once you have that concept, there's nothing that the market can do or anybody can say that make me change my mind. And even though I'm wrong sometimes, I take that loss on the chin and I don't mind. It's like putting gas in your car. Everybody got to stop and fill up their tank at some point. Your loss is just gas in the tank. If I analyze the charts properly, I don't take many losses. The only reason for that is I do my analysis on the weekend and I see the trade setups that I want to take. This trade is going up. It's going to pull back at some point, right? It's going to pull back first, probably fill this imbalance. This imbalance broke this high, and everybody can take this ride up to this area. Once it gets to this area, it's going to turn and burn, right? It's going to turn and sell. So this is your zone. This is your 78. If you're doing your analysis, you're looking to see what needs to be taken care of before price sells. This should be a standard practice for you as a trader, right? And you should stick to your guns. If you're saying, hey, man, there's an imbalance right here before it gets to my 78, I'm only going to sell once price gets to here. That's cool. Doesn't mean that I would buy it all the way up. I'll still take my buy profit, somewhere down in this area. And maybe I'll look to sell once price hits this area. I'll just set it along. Now, TT, you can have 3 or 4 confirmations if that works for you. You've been trading a long time, so maybe that works for you. And I will tell you, whatever you're doing is working for you. So you do whatever you have to do. For people who are trading this concept, the concept that I'm trading, what I'm telling you is you have the concept, right? The concept requires 3 things. This is the ICT concept. It requires 3 things. You either have it or you don't. If you don't have it, then you don't trade it. If you do have it, then trade it. But when you start adding to it, you're going to end up breaking even on trades that are give me's, or you taking losses on trades that you shouldn't take. Now, to me, that GJ trade, it was an iffy setup on the higher time frame, right? Like on the weekly, it was an iffy trade. Now, of course, it had everything that we required, but even still, once price pushed down, we broke structure. We knew it was going to pull back up to this area before it sold. But it sold, came back up. This screws a lot of people up. When it sells all the way down and pulls right back up to the same area, that screws a lot of people up. But if you're a person who can just put your trade in, stop loss and take profit and leave it alone, then all this stuff right here doesn't matter. But probably 90% of people can't put their trade in and leave it alone. They're going to add, what happens is this thing drops here, everybody adds, drops again, you're in big profit. Then you get this up move that kills your account. Because this was the low. If price doesn't break that low and pull back, then why are we adding? So whatever we have to do, whatever you have to do to find some simplicity, I would really suggest that you do that. Because if you're adding stuff to your trade setup, I think that's going to be an issue. Oh my God. Okay. So guys, I think I do this all the time. I think I do this all the time. I just want to show you something. This is This is all I'm doing. This is an ICT setup for me. All right, so price came up here. You created some highs, right? This is probably 1 hour structure. If I do the 1 hour structure, if I'm doing 1 hour structure, it's probably going to look like this. Then I'm going to get this wick that breaks this low, trade back up. ICT says you take the trade right here. Put your stop loss at this X. You can target this low or this low, right? He's going to say target the discounted zone. Now, where people get in trouble is they don't know where the discounted zone is. So what you'll have to do is,
Todd, I'm sorry, can you explain? You say ICT says take the, what did you just say? I forgot. I see ICT say take the trade from where?
from an imbalance here.
Okay.
Do y'all know how to find an imbalance?
After the displacement, yes.
Well, of course. But there is displacement in every order block. For instance, you see this candle right here? There's displacement in there. In this case, you see it right here, but there's displacement in here. This is the purpose in dropping 2 time frames down once you get your scenario, right? So if I drop 2 time frames down on the 15-minute chart, it's going to be a displacement up here. And it's going to break structure right here on your 15-minute. On the 4 hour, you just look at this as an order block that might not break structure on the 4 hour, but it did break structure, which is why price pulls back into that displacement area before it falls. But my point is this: whatever time frame you are trading, you have to look at your structure. Now, on a lower time frame, it's going to give you breaks of structure coming down to break the 1 hour structure. So when ICT says you can trade this back to the discounted rate, what he's talking about is from your last swings, right? So if you got it on a 4 hour chart, if you got on the 4 hour chart and you saying this was my swing low on the 4 hour chart, this is my swing high, right? You're going to look for your discounted zone to be at the 50% of whatever this 4 hour swing is. And when it breaks structure on your 1 hour and it pulls back, you can take this sell to your 50% of your 4 hour swing. Now, all this stuff sounds complicated to the people who don't study. The people who study, this isn't a complicated situation. Because if you're a smart money trader, we're saying that this is coming back to discount for you to either further buy, or it'll eventually come down and break the low, and it'll pull back, and you're gonna look for sales. For a not smart money trader, what you're saying is, hey, we broke structure, we got to pull back to retest. That's all you're saying. We're saying the same thing. You're saying it in a different way. So there needs to be a level of consistency in the way that you approach the market, in your lingo, in what you're looking for. Now, some people would tell you that this push up, you shouldn't trade this counter trend back. What I would tell you is, if your trading plan calls for you to ignore 317 pips, you need to throw it in the trash can. Now, I say all this stuff tongue in cheek, because if you can't see it, you can't see it. So don't be trying to trade like me if you can't trade like me. But what I'm saying is, if you don't even believe in the concept, then it's impossible for you to take the trade setup. And you need to go to trade a concept that you actually believe in, that there's without a shadow of a doubt. For me, whenever I saw this push down, I knew, man, it's going to pull back up and we're going to break down from there. But many people don't believe, and that's the problem that I see. A lot of people don't believe in the concept, but you're taking the trade anyway, and you're trying to mix and match. It's very difficult to start mixing and matching. You get yourself in trouble because you might have heard TT say this or Kim say that. And then you heard Todd say this. Well, I'm not trading TT and Kim's strategy. I'm trading mine. TT ain't trading my strategy. She's trading hers. Kim ain't trading either one. She's trading hers. And it's all cool and it's all fine. And I think everybody's trying to help. But I think that if you start listening to all three of us at the same time, it's going to cause more confusion than anything else. A very simple version of what I do is this. And we can make this as complicated as possible, but we can also make it as simple as possible. There's a bearish order block right here. Now I can give you 1,000 textbook reasons of why we should take a trade setup. But if I just put the Fibonacci on this one bearish candle in this order block, I mark my golden zone, I mark my 78. If I take a trade at the 62 and I cover the 78, I win this trade. Period. I won. I can give you 1,000 different reasons why. I can drop down in there and show you 150 reasons, 150 imbalances. I can do all that. Or I could tell you to fib that order block, right? I could tell you where you put your stop loss. And then I can tell you where to take your take profit. And you can win that trade setup. To me, if you've not been studying the same 4 years that I've been studying, and I mean really studying, I'm going to confuse the hell out of you explaining to you how I knew that this trade was going to happen. It's easier for me to tell a new person, hey, we got an order block at our area of interest. Fib that order block, take the trade at the 62, put the stop loss at the 88, and take the trade. You're going to lose some of those trades because sometimes this stop loss is going to go to the 92 and it's going to stop you out. And you're going to lose that trade and it's going to go right to TP. But if you take 100 trades, you're going to win 65 of those trades, 75 of those trades. And that's all we want as traders. We want a level of consistency. In the major leagues, if you bet 30%, you're going to get paid $500 million. They're going to give you a $500,000 contract over 10 years for you to bet 30%. As a trader, if you win 30% of your trades, you could be a millionaire in a year. You know what I'm saying? I mean, that's how dumb this is. So if you find a level, you might not be able to speak about a trade like a TT. You might not be able to say, well, I'll drop down here, drop down here. You might not be able to do that. You might not be able to speak about a trade like Kim. But if you can recognize your trade setups, whether that's a zone, maybe this was a zone for Kim. For me, this is an order block. If you can recognize that, and you can analyze it, you just put your fib on it and take the trade from your order block. It's a win a high percentage of the time. All I'm trying to get people to understand is it's great to be able to make these charts do backflips and break it down to the nth degree and get on the 5 minute. But it's even better just to win. This candle right here came down, huge displacement, which means imbalance. Huge, broke structure. Wicked out. You fib this move. You fib this move. Where is my okay. I would have fibbed this 12-hour order block. You fib this move. Your zone here, and there's definitely a way for us to drop down and see. I could target this low. I could target this imbalance. 50% of this imbalance. That's a 300 pip trade. I'm in this trade. I'm not panicked. I'm in the trade. It might bounce around here. Next week, it's going to hit. All I'm telling you guys, this is going to pay you probably in the 90% range. I don't know the statistics. I just know that you're going to be more consistent doing the same thing over and over, and it's basic and it's simple. I didn't have to drop down 16 time frames. I did this on the same time frame. You're going to lose some trades, but you're not going to lose the majority of your trades. You are going to grow your account. It's a simple thing. It's the exact same thing that we do on the weekly order block guide. And I'm not saying that once you get this down, you just stop learning or whatever. Keep learning. But instead of racking up thousands of dollars in losses, take the basic steps. The reason that people use the 62 and the 78, you're going to miss some trades to stop at the 50. You're not going to get in those trades. And you're going to miss many of those trades. But the trades that go to your 60, your 62, you're going to pick those trades. Those are higher probability trade setups. The trades that go to your 78 are even higher. I watched a video of this dude. He only takes trades at the 79%. I'm like, damn, I know he don't get very many trades. He's like, yeah, I only get like 10 trades in a month. He said, but every one of those trades are over 10%. He's like, some months he go back and get one or two trades. But his account is so big, he doesn't worry, and he has plenty of time to spend with his family or whatever the case may be. All I'm trying to get you guys to understand is it doesn't have to be overcomplicated. It can be as simple as I just showed you. And you're going to win plenty of trades.
I really like this setup.
I do too. I mean, it's I like a bunch of setups. I like the indices. There are a bunch of setups, in my opinion, that are great. I like Euro USD, especially since they just dropped the interest rates. Like, bruh,
Yeah, that is crazy.
we're gonna get some great trades. But the frustration is we all see that order block. We all see it. Wait for price to pull back into your zone. Wait for it. We all see this order block. You can go to your phone right now. Well, maybe not right now because the market ain't open, but you can put a limit order, a sell limit, 1.08718.
Hi, thank you.
Stop loss right at these highs, 1.09026. Take profit, these lows, and you can go live your life. It might take 2 weeks for this trade to play out. I don't think it will, but I'm just saying, it doesn't matter how long it takes, guys. What matters is, do you have a winner? They just dropped their interest rates. Here's the kicker, guys. This is the funny thing to me. We see that bearish order block get pushed down. What I didn't show you was the move from here to here that broke this structure. I didn't show you that move. Because in that move, you would have put your deal here. You'd have put your stop loss here, or your 78 here. You'd have entered the trade right here. Your stop loss would have been above this 78, probably at the top of this area, and you'd have still been in this trade. You'd have caught this whole trade based on this higher time, the same deal we just did on the higher time frame. All I'm trying to say, guys, is we don't have to be 2-minute chart technicians. We just have to have a basic set of rules that we follow.
Are you buying this back up?
I'm not. No, I'm not, because there are other trade setups that are better. If you are going to do this, which I don't think you should do it if this is not what you do. I think you should expect this to push down first, then go up. But if you're going to buy it back up, then I don't really have a problem with that. Y'all know I love doing that. But there are other trade setups to me that give me more than 65 or 70 pips. I would bet that it's probably only 2 or 3 people on this call that don't have setups that they see every week that would work. But we probably only have 3 or 4 people on the call that consistently make money. That means the rest of you some guns got psychological problems, right? You're doing too much. You're doing too much. You're overcomplicating something that does not need to be overcomplicated. Yeah, we can all drop down to the 15-minute chart. On every one of these setups, I haven't had to drop down to any other chart. If I use the same basic steps. Y'all have questions? Come on now. Handle up, handle up. Guys. Y'all don't have no questions. Break a structure. Probably close to a 78% pullback. This would have been the target for me. From selling here, this would be the target. If you had gotten this trade here, yeah, it have went down, pulled back. You broke that structure. When it pulled back, you could have added another position to sell. It went down, broke this structure, pulled back, you could have added another position on a sell. All the way until you get to your TP. I know some of y'all gonna get in this EU sell. It's gonna go down, break the structure, pull back. This is your TP on this one. But my personal TP will be down here. And when it pulled back, you can add a position. Many people got jacked up in that GJ trade because they added positions. And there wasn't no structure break on the higher time frame. If you add in positions on them lower time frames, you got a TP at the lower time frame TP. But I think that's really another discussion. I just want to help people win a basic trade setup because they're all over the place. You only need to win once a week. One trade a week, man, can change your life. One win every week. You can go from $150 to $38K in 10 winning trades. Go from $450 to $115K, 10 winning trades. And I know that sounds like a lot, but we're looking at we're looking at winners, man. We're looking at winners. Is anybody confused? Kai, you say you ready? I don't know, man. I don't know, Kai. I don't know.
Ready. I'm ready.
I don't know. Because you turned the winner into I don't understand that, man. Especially you. I can't believe you turned this winner into a loser.
I know I was being greedy, but I'm not gonna. I did exactly what you said we was doing, adding positions on a
Okay. So that it
lower
was
time
bad.
frame bracelet structure. And so
So,
now I know next
sweet.
week I won't do it again.
Man, submitting the time is hard. I get it because we want to all shorten that time, man. But 10 trades. This was a 100 pip winner. That's one trade. Maybe you're in this. You'll probably win by Wednesday. That would be two trades. Then you get in for the sale. Maybe that sale takes 2 weeks. But these are this is over 100 pips. It's going to shorten that 10 trade window. A lot of great setups. We got a lot of great setups. We have lots of great setups. This is not even on the weekly setup list, but it's to me, it's one of the better setups. There's a daily order block. You can fib it, wait for the pullback, take that dub. Did everybody know what they trading this week? That list was kind of long. Yeah. Everybody know what they're trading. Brad. All right then, guys. There's no questions.